Good morning and welcome to Frontiers of Knowledge segment of Dr. Lamba's Awakening Call. 3 days back, August 22nd, the Reserve Bank of India issued a report which is having a wide-ranging impact to the people who are not understanding it. And this report stated that the Reserve Bank of India is going to introduce in this financial year, that is, before the end of 31st March next year. So in this about 6 months, the bank is going to issue a digital rupee, and that will be called CBDC, Central Bank Digital Currency. What it is? What would be its impact? Is it beneficial? These are the questions that are being raised. Although people still have not understood the implications of that, but then the finance minister had said in her budget speech that RBI has repeatedly voiced its opposition to the private digital currencies, and therefore the government last October widened the scope of paper rupee to include currency in that digital form. So here it's an extension of digital paper currency, and that is the central bank digital currency, hereinafter called CBDC. According to the central bank, it's a legal tender. It will be issued in a digital form in the same way as a currency, and it will be exchangeable one-to-one with a normal currency. Only the form would be different. The digital fiat currency, or CBDC, can be transacted using wallets backed by the blockchain. Now, the inspiration comes from the Bitcoin, but it's very different from the decentralized virtual currencies and crypto assets. That has to be understood. The people who want to go in for this, you must understand the inspiration may be different, but it's absolutely different. The digital fiat currency, or CBDC as they call it, can be transacted using wallets, and then it will enable the user to conduct both domestic and cross-border transactions which do not require a third party or a bank. How would it help? That's a major question. The introduction is likely to provide significant benefits, but then likely and being are two different things. And the significant benefits, what they say is, it will lead to a more robust, efficient, trusted, regulated, legal tender-based payment option. But then, have the risks been taken into consideration? The digital currency will give a big boost to the digital economy, agree. But then, this is the first major country to officially launch the currency after China. Other countries have not officially done it. They are going to do it. Now the full form, as I said, is that it is the same currency issued by the same bank. The form is different. It's not paper currency. It's not polymer currency. It's a sovereign currency in electric form, and it will appear as a liability on the RBI's balance sheet. The underlying technology, form and use can be molded for specific purposes. And this currency is creating quite a lot of movement all over. And this is what we have got to see. Why do it? A survey was conducted in 2021, And it was found that 86% governments all over the world were actually researching the potential for the digital currency. 60% were experimenting with the technology, and 14% were deploying pilot projects. Now, if everybody is doing it, why not join the rat race? That's possible the government of India thinks. Now, central banks, faced with this dwindling usage of paper currency, credit cards are already there. Hardly anybody carries currency nowadays. So they want to popularize a more acceptable electronic form of currency like Sweden has done. But the Sweden currency is electronic form, it's not digital. Then the jurisdictions with significant digital cash usage seeking to make issuing more efficient, like they do in Denmark or Japan. So basically the paper currency is on the way out. And the central banks seek to meet the public need for the digital currencies to counteract the challenge posed by the cryptocurrency. And cryptocurrency not being under the control of the government can fluctuate badly, as we have seen it. Now, how would it be different than the other digital payment systems? Payments using CBDC are final, and thus they will reduce the settlement risk in the financial system. Imagine a UPI system where a CBDC is transacted instead of the bank balances. It's just like handing over the cash. And the need of the interbank settlement disappears. So that system of interbanking transfer, where you transfer money here, you give the bank transfer, bank branch, ISBN number and all that. So this would also potentially enable a more real-time and cost-effective globalization of payment systems. This is very important. A, it will be real-time. B, it will be cost-effective. C, it will be safer. And it's conceivable for an Indian importer to pay the American exporter on a real-time basis in digital dollars without the need of going to the bank, getting a money transfer. This transaction will be final, as if the cash dollars are handed over, and it would not even require the US Federal Reserve System to open for settlement. Time zone differences would no longer matter. And that is something. Now, the research note issued makes interesting studies. And that says that this is an electronic record or digital token of the country's official currency. So official currency remains the rupee. This is a digital token of that. And it fulfills the basic need of a medium of exchange unit. Till December 2021, out of 200 odd countries in the world, 87 countries are exploring this. 35 countries are considering it, and 9 countries have launched a digital currency already. Bahrain, Bahamas, Caribbean countries, Nigeria. And possibly the latest country to launch is Nigeria, the first country outside Caribbean. But all these countries have launched it in a different manner. They have launched on the lines of Bitcoin. And the 4 major countries like USA, the Euro area, Bank and UK, they are working on that. China has issued, and yuan is practically out. They are no longer the pilot scheme. Now India has to launch it, but it will first have to launch on a pilot level. And that would make a difference. Now, in comparison with the existing form of money, the user major benefit would be liquidity, scalability, acceptance, ease of transaction, anonymity, and faster settlement. Now, there is one danger, anonymity. The Benami transactions would increase. RBI hasn't taken it in consideration. The Benami transaction and the money laundering will become much more easy. I fully agree that the adoption of CBDC will improve and make it easier for people to use it for supporting infra provided by the government. But the risk of the black money or Benami transactions, that is definitely has not been taken into consideration. The development will, of course, make digital currencies more accessible to the people, just as UPI made digital cash easier to handle. So, what you can hope is that RBI will leverage the existing infrastructure through NPCI for faster introduction and adoption of the digital rupee system through QR code system. So the whole thing being done with this QR code system, how many people would be able to comprehend it? And it can have many such case scenarios in the real world. For example, programmable payments for the subsidies and the use of the financial institutions for faster lending. And we can see a pragmatic shift, that I agree, that there will be a pragmatic shift in the cashless economy in the near future. But this, coupled with the basic South Asian concept of the black money, Benami, hidden transaction, and a desire to own money and not show it officially, that is instinctive in majority of the Indian, Pakistani cases. And that is something. So this will give, of course, impetus to the government's stress on cashless payments. And the cross-border remittances would be much easier. An environment can be created, and that's a benefit for interoperability, whereby the faster real-time transactions take place. Another thing would be the cost of the transaction would reduce, both for the individual and for the government. For example, a worker in, say, Dubai receives 50% salary as a digital payment, allowing him to send money to the relatives in other countries cheaply and efficiently. Now, fee for wiring money often takes up to 7% of the value of transaction, average. And the World Bank estimates that the cutting fee to 2% would give $60 billion boost to the remittance. Now, India has a huge inflow of currency from diaspora. People living in Canada, USA, Europe, send money home. Gulf countries, Kerala is flush rich with the remittances. And the boost is about $16 billion a year. You can well imagine where the economy would go up. That is a very, very positive thing which is going to happen. So ease, operability, lower cost, increased returns, real-time payments, savings, all this is going to be there, but then, as I say, the taste of the pudding lies in eating. And we don't have to wait long for the pudding to be prepared. It's being prepared, and shortly it will be served. But for the businesses. I had a talk with a couple of CEOs, and they say, well, they welcome it, but they like to see its operation for at least a few weeks before embracing it wholeheartedly. They start using it again as a pilot project. Each company would start it, I can tell you. FICCI has, as a matter of fact, issued an advisory to its members telling them about this, and this might be operational, say, by the end of the year. So there is an interest, and there are definite benefits, but at the same time, the income tax authorities in India, the revenue authorities in India are keeping their ears and eyes wide open to see that it's not misused. On the whole, it's a leap forward, a step forward towards digitalization, cashless society, and that is something not to be sneered at. Let's see which way the wind blows. Thank you.